Hello, I'm Doug Mackenzie and welcome to the Fintech Show. This episode will have us focusing on the delicate balance that banks now need to manage when it comes to their cash and treasury management. Just how are banks weighing up the risks, rewards, and the responsibilities of a faster and more effective liquidity management system? Here at FF News, we've enlisted the help of 3 companies that know far more about this issue than anyone else. SmartStream Technologies, a leader in financial transaction lifecycle solutions, has been plugging links and enabling banks to do what they do best for years now. Dehaan sat down with our founder Ali Patterson to let us in to a few of their secrets. Meanwhile, I spoke with Beata Lubinska from Allica Bank and Henry Cleary from the Bank of Ireland to get a better sense of the biggest challenges facing banks in the industry at a time where fintechs are becoming more common than ever, but also liquidity management is also becoming a lot harder to do. First up, SmartStream's global head, Dehaan, explained how the company can assess and remedy any weakness in a bank's financial lifecycle.
Peter, first of all, thank you so much for taking the time to speak with us today. What is it that you look after at SmartStream? What does your day-to-day kind of entail?
So I'm the global head of business development within SmartStream. So I'm responsible for cash and intraday liquidity as part of our broader product suite that we have. So complementing our reconciliation business, our collateral management business, our corporate actions business, the pillar that I'm responsible for is cash and intraday liquidity.
So what are some of the primary challenges that banks face when it comes to liquidity, especially against this backdrop of some of the recent US bank collapses?
The thing here is that there's been 50 failed banks in the last 10 years in the US. So we had a quiet period of 21 and 22 where there was no failures, and then there's obviously been 3 this year. If you then kind of roll that out into kind of value, the 50 that have collapsed, that equated to 6 trillion in assets and around 5 trillion in liabilities. So some massive numbers around that front. The key there is that across that decade, the interest rates were only at around 2.5%. Now they're at 5%, and that's what's kind of pushing more pressure on banks to better manage their money. I mean, we'd seen the way that Silicon Valley was, the situation there. Obviously the CRO was an issue, but I think that was a kind of, that reflected the broader mismanagement of intraday liquidity, and that's what's brought that to the forefront in the last few months rather.
Next, I also sat down with Beata Lubinska, the treasurer over at Allica Bank, and they're headquartered in London and making huge waves.
So my name is Beata and I joined Allica in 2020 just in the middle of the COVID pandemic. So quite challenging time.
Yeah.
My experience is obviously in treasury departments across a number of different banks based both in Milan, in Italy and London. So I have more than 19 years of practical experience in treasury and mainly covering different aspects of treasury management, such as interest rate risk in the banking book, hedging, liquidity management, behavioralization of the balance sheet, investment strategy, and funds transfer pricing. I'm also an author of 2 books, published quite recently, Asset Liability Management Optimization in 2021, and Interest Rate Risk in the Banking book, published year after.
Congratulations.
Thank you very much. And during my PhD program, I focused quite a lot on balance sheet optimization. So I would say this is one of my favorite topics, which I can say I leverage quite a lot in Allica.
Yes.
It is crucial to optimize the resources such as liquidity, capital, optimize hedging in order to be better off in terms of the profitability, in terms of the risk, exposure to different risks. And this is very important.
Next, we headed to Belfast to sit with Bank of Ireland's Head of Global Markets, Henry Cleary. Henry gave us a comprehensive look at the bank's inner workings and the unforeseen effects when it comes to liquidity management from events like the pandemic and Brexit.
I head up the Bank of Ireland Global Markets dealing desk here in Belfast. It's part of the wider Global Markets division in Bank of Ireland, and we provide foreign exchange services, interest rate hedging and trade finance services to the Bank of Ireland's customers. So we look after the bank's franchise. So the types of customers that we have here in Belfast range from your corporates down to your small micro enterprises. But the vast majority of our customer base would be that higher end SME, mid-corporates and corporate customers. And we interact with them on a day-to-day basis, providing foreign exchange services. As you know, the economy here, a large part of it is based on trading internationally, whether that's with our closest international trade partner, the Republic of Ireland, or further afield. We have customers here who are trading worldwide, and we have also customers who are just trading across the border. The big issue for those customers is the fact that they have now had generated income in a foreign currency, and they need to bring back into sterling to either pay for the raw materials, the wage costs, etc., all of the other costs. So that's the big issue for our customer, is converting the foreign exchange back into domestic currency sterling. Brexit, you know, while it's 7 years ago, it still feels like it was yesterday. And I suppose in terms of just considering the impact of Brexit on customers, the initial impact in June 2016 was pretty significant. We saw a 10 to 15% drop in the value of sterling almost overnight. And so in the days following and the weeks following the initial Brexit vote, it was very much working with customers to help them manage that. From our exporters' point of view, so the people generating foreign exchange income, a number of them would have hedged positions that they would have now seen were seriously out of the money. And they could have been at a competitive disadvantage, or they may have just had an opportunity loss that they weren't going to generate as much sterling for it. So it was working through with those customers to help them deal with that. But the customers that were impacted the most were the importers, because if they hadn't hedged their foreign exchange costs, they suddenly found that everything was costing them 10 to 15% more. So it was working with them as they were able to absorb that into their businesses. So we had a number of those customers, you know, coming to us for the first time saying, look, yes, I've missed the opportunity here, but I do need to hedge my foreign exchange costs because I can't absorb anymore.
Is the global banking system looking a little bit more vulnerable with interest rate rise? And do you think there could be another liquidity crisis on the horizon?
So I think it goes back to how do you manage your intraday liquidity? What are you looking at? Are you looking at projected or are you looking at actuals? And if you think about the way that a lot of banks have antiquated, fractured infrastructure, that's been little or no investment over the last 10 or 15 years, and the time has come basically for this to be addressed. So kind of the way that I see it is that you're given three choices, like the three Bs. Do you bolster what the systems that you have already, essentially putting sticky tape on what is there? Do you build? And if you're a big player, tier one name, yes, you probably can afford to build. If not, you have to buy. So then you're looking to partner with a trusted advisor who can help you complement and partner with the systems you've got in place. So yes, there will be. I do see there being further catastrophes, I suppose, within some banks, because some people will not learn. And it goes back to what I said before, on the uninformed advising the uninformed. Things can happen quickly. What treasurers have been saying to me and cash managers have been saying to me is that they have to, so the boards are putting them under pressure to come back to say, what are you doing in a what if scenario? And the regulators are going to be coming back with a what if scenario. How do you play this through? What happens if there's a run on the bank? How do you better manage your money? And then it also goes back to the projections versus actuals. The more information that you can ingest, and as long as all of the spokes are pointing into the hub, you're creating a better position for you. So projected vis-a-vis actuals, you're working on truer numbers, and that's what treasurers and cash managers need to do to better manage their intraday business. So within the cash and liquidity space, our cash management and intraday modular platform that we have, which can be deployed on premise or on the cloud, fully workable solution. We've got clients in every continent. We've been doing this for a long time. We've got some deep relationships. We work with probably 3/4 of the top 100 banks, and we've got very good understanding of the systems.
Automation is must, because without automation, Treasury cannot see the holistic picture. You don't see how, what is the cash flow need, what is the business requirements over the next, 1 week, 2 weeks, 1 month, or even longer time horizon. So just to make a precision, so this is known in Treasury as the robust liquidity management. So what does it involve? The liquidity management is divided in 2 parts. You have the short-term liquidity management, which includes not only the tactical management, like what should be my funding need in order to cover the liquidity, to the needs of the business for the next 1 week or 2 weeks. Or even today, which is known intraday liquidity management, so during the day, but also the strategic picture of the funding composition of the balance sheet for the future. And this is where optimizations comes into the play.
I see.
Because you have the short-term analysis, which of course involves automation, because otherwise how can I see what is the requirements for the next future?
It would be impossible. Yeah.
It would be impossible.
Yeah. I'm afraid that's all we've got time for in today's episode of the Fintech Show. Thanks to Peter, Beata and Henry for the insights. I'm sure we're going to need them again in the future as things get more complex and finding that management balance just becomes a little bit harder. You can catch the rest of the series and so much more over at ffnews.com and of course LinkedIn, where you'll see me, Doug McKenzie, in the comments. Thank you very much and goodbye.